Last week we wrapped up the stock market with some of the sharpest pullbacks we've seen in quite some time. And just when we thought things would calm down for a little bit, we had Bitcoin take a dive over the weekend, slipping down below that critical $80,000 level, with altcoins sliding another 10+% across the board. Now all eyes are on today, with many bracing for what could be yet another Black Monday event. But before we jump to conclusions, here's exactly what I'll be watching for as we kickstart the beginning of this week. If you haven't already, please be sure to like and subscribe to the channel. And while you're at it, go ahead and pour yourself a steaming hot cup of coffee today. You're gonna need it. You may even need a double shot of espresso as well, because we're breaking it all down right now. Before we dive in, a quick shout out to our channel partner Coinbase, one of the most trusted and beginner-friendly platforms in the space. If you've been looking to start investing in crypto, or you just want to try out a new exchange, you can use our link down below in the description to sign up and get up to $200 in free crypto. Check it out if you have not already. All right, folks, so the key $80,000 region, which is that yearly pivot, that high time frame average, has been the key level that I personally have been looking at to see the strength hold here on Bitcoin as support and see if we're going to get another move higher, whether or not that was two new all-time highs or just even a bounce back to make a lower high before continuing lower has been the key region that I've been looking to. And if we go to the weekly time frame, we can actually see that we have yet to close a weekly candle down below here, and we may actually end up doing that this week, right? So at the time of recording this is a few hours right before the weekly close, about an hour actually, right before the weekly close here tonight and on Sunday evening as we're posting in Monday morning. And this may just be the first week where we do close down below this region. So for me, starting to close dailies and weekly candles below has been the sign of major weakness that would institute another large sizable move to the downside, honestly. While many would look to the 74,000 retest of the previous high, which would be the most logical area to look to. I do think that we would actually have a quite larger drop over time, probably breaking back down into the middle of the old range that we had put in back here with a $67,000 target area for me, and then all the way down towards potentially $59,000, right? So just to get the overall, big bearish case in the room, an outlook there. That is what we would be looking for if we were to see continuation down below this $80,000 region. More than likely, we're going to come back into this previous range down here, right? We've got our point of control sitting around that $67,000 area. And then for me, I actually have a sizable level down below that. So that's the worst case. If we just melt down from this region, that would be the next major areas for me. Once again, yes, there's things in the way of that. You have the previous $74,000 high from last year, things of that nature that would probably provide some relative speed bumps along the way. But that's what I'd be looking for. Now let's take a little bit more of a local outlook here, because even though that the trend and the overall market may look like it is going to continue lower, usually what we see here, very similar to what we just saw when we started our new month, even though it's resulted in a little bit of a pullback here again, when we have a week where we just completely melt to the downside and everyone is getting very fearful, everyone's getting to a point of panic, generally we get a bounce out of that area, right? And at the end of the day, even without the sentiment view of it, it's usually just to come back and fill some new averages, mean reversions, run some old ranges, things of that nature, right? So let's take a look at what our new weekly range would be so that we can have an idea of where Bitcoin may trade and travel through for this week. And I want to point out why I have the 886 level pulled up right here. It's just something I'm monitoring at the moment. This is just a simple Fibonacci retracement from the local swing low, I suppose, from March 11th to the current highs. We put in about 89,000 earlier on, I guess just about a week ago. And that is just a simple retracement at this point. So we have basically retraced this whole move right here, 88.6% or 90% just about. And I look for this level specifically because it's deeper than the 786, it's deeper than the golden pocket, and usually what happens here is we start to set up potential harmonic patterns there as well. So just something I'll be looking for here. But the real key here, regardless, for any upside at the moment is going to be the reclaim, right? So getting back up above that $80,000. And this is what I'd be looking for as we kind of start the week here. So this is going to be our new weekly range that we're going to begin in the next couple hours here, basically. And a lot of times, like I said, at least what I notice time and time again is when we start the week off trading pretty much right at the low, we may come down and kind of sweep around this region for a little bit as we get into some of the shorter term time frames. But more than anything, we tend to get a pushback back towards the previous range around this region. We have a new weekly NPOC, at least soon to be. So this is a volume target, an untapped point of control basically is what it'll end up being, up at about 82,700. We have a new untapped weekly pivot as well that's going to generate pretty soon, and that's going to sit at about 82,000 as well. So those are going to be the weekly levels for this week as we start going into it. Again, the big key for this though, while we're trading under 80,000, we have to imagine that more downside is to come. However, in this case, I imagine we actually get more of a pushback up, even if we are going to roll over again. That's what I'd be looking for in the coming days to weeks here, right? So for this week specifically, seeing something along these lines where we push back up to that NPOC area, about 82 to 83,000. It's kind of going to be the first thing I'm looking for. And then aside from that, if we actually find some strength in this region, we tend to see a range rotation of the previous week ranges a lot of times when we get into there also. And then as well as that being said, we have our previous week high, which will be another area that we'll be targeting towards, assuming we get some gas in the tank here as the week begins. So right now, obviously, it doesn't seem like that'll occur, and there's no guarantee that that will occur. But that is something I'll be looking for here. Once again, it's based on a if-then situation, of course, with us starting to live back above $80,000. Aside from that, more downside is the most probable while we're living down below $80,000. Once again, the next major areas to be aware of would be the previous all-time high at 74,000. Personally, I don't see too much credence there. For me, if we're going to truly lose this region on the chart, I would anticipate actually a move down to $67,000 to $60,000 on Bitcoin, which is not going to result well for the altcoins, as we all know. But as I stated in the beginning, not willing to jump to conclusions and just assume that we're going to go straight there from here. Very well could happen. We've seen it before, but I would be more on the side of leaning towards looking at this like the weekly ranges. Like I said, most times when we start off a week, either at a low or at a high, and emotions are running really, really high at that time. As I said, we're going to start off this week in a lot of fear. To see a little bounce out of this region, even just to go back to 82,000, which is really nothing at this point. That was just where we traded at all weekend long. Is going to be the first thing I'd be looking for, and then look for the range rotation, potentially back up towards 84,000. Mind you, there's a CME gap there as well. I did forget to mention that earlier. So there is going to be a CME futures gap above us, which I believe closes at about 84 to 85K. And then at that point, we'd be looking for that previous week high if things would progress from there. All that stems and begins from that reclaim of $80,000. All right, Ethereum is just straight nuke city. Just no strength at all, nothing but downside, almost 70% off the all-time high. Absolutely incredible, right? So for me, I was looking for that move down towards this $1,670 region on our last updates here when we were trading around the range low here. So we've come down here, and this is just a perfect example of, once again, it's hard to just aimlessly look at something and say, all right, we're going to come down to this region, and that's the end-all be-all. We're going to get a huge reaction from there and bounce up. It really does come down to gauging the context of the market when we get to some key regions, once again looking at Bitcoin at this point and everything else, to really see if there's going to be any strength or continued weakness at that time. Right now, looking at some more weakness from here, once again, can change pretty quickly here as we start a new week. It's just something to be aware of here. But for me, it would be just like Bitcoin looking to start claiming that $80,000 level to get more upside if we're going to see any from here. For ETH, it's going to be reclaiming that $1,670 level. So we're sitting currently at 1,580, all right, about 5% away. So that's just a pretty decent size move just to get back up to it. Then from there, once again, we have a few key regions up above here starting to really look like we won't, necessarily get a huge range rotation out of this. But we do have our new pivots, our high time frame averages for the month of April. So this is a likely level to be met in April. It doesn't have to. It's not a guarantee by any means, but it is there. It still is untapped. So if we were to see a reclaim of this region, going off the basis of Bitcoin getting a nice bounce just to start the week, once again, even if we're not going to go back up to all-time highs or anything like that, just to see a bounce coming in the foreseeable here, this is what I'm looking for ETH to push back into, probably get another push into this range a little bit, and then if we were to push up to this area here, it's $2,000 is that high time frame monthly average. It still remains untapped, as well as 2,400 being a quarterly level of that. Our 382, our macro 382, has shifted down now that we've gone a little bit deeper here. Originally, it was sitting at about $2,700. It now comes down to about $25 due to this current pullback here. So just the three major areas I'm looking for if we get a rise out of ETH in the coming days or weeks would be those three at the moment. Otherwise, hold below this 1670 and the same deal. We have to expect more continuation to the downside from here. Bitcoin dominance chart still maintains some strength here as we're seeing a continuation to the upside here. There was a gold pocket region I was looking for from the overall high, or the current high, I suppose, up at about 64% down to that 60% level, which we've come through pretty strongly here. And now we're probably moving on up to at least that 886. So very similar, looking for that 886 area to see if we get any kind of engagement or reaction from there. Could set up yet again, maybe another harmonic play. We'll just have to see how things react up to that point. That does sit back at about that 64%, which is only just about 1% away from where we are right now. All right, we're going to end this video with taking a look at the SPY, which is the ETF that measures against the S&P 500, and sizable move to the downside as we closed off the week last week from the overall high towards the current low. It's down about 18%. It's basically since February 21st. And we've left a few key regions back around these highs here at the moment, not too relevant and shouldn't be too overly concerned with them. But for me, there is a gold pocket down below to be aware of here. If we do continue any lower, it's around 476. And once again, looking at this in the more midterm idea, even if we get a bounce here, you can see a continuation down lower. And if we already get the bounce first, because we did come down and we just swept ever so slightly, took these lows back from August of 2024, which does sometimes set us up for what's known as an SFP, which is a swing failure pattern, which you basically come down, and anyone that's been in the market as far as like a trader that's come in and holding positions with any kind of tight stop losses or moving stop losses up, that comes down, knocks all those traders out. They re-enter their positions because they obviously don't want to miss a move. More than anything, that doesn't really kick in until we actually get a move back to the upside. And yeah, so just something to be aware of, that we did come down and sweep those lows. So just an interesting piece there. And if we were to push back up, even just before rolling back lower at this point, which we do have a couple key regions down below us just to be aware of. And one is that gold pocket area, which is the 476 to 482, once again down below us, as well as two high time frame averages, both untapped. So these are some key regions down below us, back at 443 and 454 respectively, basically. So those areas are the key areas I'm looking for the downside. But in the near term, I just can't assume we'll just go straight down from here. So if we're looking for a bounce, let's take a Fibonacci retracement from the overall high to the low and the gold pocket for this move. Let's just throw on a couple of key regions here. Does pretty much look like it would potentially bring us back up towards this area here, right? So we have that weekly NPOC, so that's a naked point of control, an untapped volume level that's left over from last week, sitting at about 574, which is just about back to the highs of where we were last week. And then we have the 0.382 Fibonacci retracement. Once again, these are retracements to the upside from the current move. Even if we're going to see a move something like this, where we do come up, lower high, and continuation lower, these would be the key areas I'd be looking for as we begin next week. And those three areas do come in really nicely at a 544, 557, and the one I like the most out of this, just because once again the confluence lineup here is back at 570. That would be quite the move back to the upside. We have 13% retracement back up, and at that point we would just have to reevaluate, look at the context of the market as always, and just approach it with a neutral head here. That's going to wrap it up for today's update. As always, a big thank you to our channel partner Coinbase for supporting the content. If you haven't already, please be sure to check out the link down below in our description, and you can sign up and get up to $200 in free crypto when you get started. Wishing you all a great remainder of your week. Stay sharp out there. I'll see you all in the next video, and until then, everybody, cheers.